Hi there. Welcome to another edition of Talk Stocks. I'm your host, Keir Reynolds. And today we're lucky enough to have Shawn Khunkhun, President and CEO for Dolly Varden Silver. Trades on the NYSEA with the ticker DVS and also on the TSX Venture Exchange with the ticker DV. Hey, Shawn, how you doing today?
I'm doing well, Keir. Appreciate being on.
Hey, thanks for coming on. You're obviously a story that we've been sort of following for several years. It's done quite well under your tenure here, I guess. If we look back in time, all the way back to 2020, seems like a long time ago now, but kind of a blink of an eye for others. You had a market cap of around 20 million. Today, it's over 500 million. How's that sort of transformation under your leadership as CEO? How's that sort of changed your kind of approach to the day-to-day now and how you sort of stick handle and move this company along?
That's a great question. One of the challenges when you're smaller, everything is very dilutive. When you're a 20-cent company, just bringing $2 million into the business, it can be quite dilutive. When you're a $20 million valuation, so you have to be really thoughtful. You have to, really play the backdrop of metals prices. So, it's really, really important to go out and, the days that gold are up, get out your news releases, or, silver is up, you get out your news releases and, fill your treasury on the back of, success. And you've got to be so thoughtful with every penny you spend. And as you start to move up in terms of value and price, you're able to take more risk. You're able to drill more holes. You're able to, be more acquisitive. Your currency's appreciating. So it becomes easier as you get bigger. And so now the challenge that I'm putting on myself and the team is, okay, so we've crawled our way out of the ditch, and we've got a bit of volume and liquidity, and we're on a few indexes, and we've got $64 million in the bank right now. Okay, so we believe in this project. We believe in this area. Now, how are we going to build it? How are we going to develop it? How are we going to continue to grow it? How do we do this so that our shareholders benefit? Like I've seen people just go out there and they're so focused on just getting into production or finding it that they strip away the economics from their business. They put on punitive streams and royalties because all they care about is the development of the project. That's not what I'm thinking. The first thing I'm thinking about is ROI for the investor. And so that's the difference. And so I've got some ideas and some plans on how we make that transformation from advanced explorer into a producer. And there's two paths. Number one, we get acquired by a larger entity. Number two, we merge with a producer. And we continue to grow and we continue to stay sort of quasi-independent. And if you're merging, you're essentially bringing two businesses. But and so I like the idea of trying to grow before that ultimate sale happens. And maybe it never does. Maybe we become the big player based on our team's age and ambitions. And so it's an exciting time. But so yeah, it's a lot different today running a $500 million business than it was running a $20 million business.
Well, that's an awesome answer. Thanks for going through that with us. So obviously you had some news today. That was a bit of a scramble for why we tried to find some time in your schedule to kind of connect. You put out a monster hole today with amazing gold result. Maybe you could kind of quickly walk us through that. The other thing, I'll let you explain, but the other thing that we'll get into, I was wondering, is there a couple breadcrumbs in that news release, a couple of other things that might speak to sort of the future of how you might become a developer? I'll ask you that after, but maybe you could touch on touch on the drill results. Spectacular.
Yeah, listen, when I first started with Dolly back in 2020, and it wasn't until 2021 that we started having real drilling success. And I remember when the first time we pulled a big hole, I thought, oh, how are we gonna live up to this? Like, we've set the bar high here. And so every year I've been nervous about coming up with results. But now I'm almost getting to a point where I'm very confident in future positive results. This has been a year where we've put out 3 result-oriented press releases, and I'm going to talk about this in gold terms just for a second. Taking the grams and multiplying it by the meters, a good gold hit, a really good gold hit, is 100 gram meter interval.
Mm-hmm.
And the fact that we've had better than 300 gram meter intervals. And so what I'm doing is I'm taking our silver hit, where we hit 1,400 grams of silver over 21 meters, which is like, I think it's something like a 30,000 gram meter silver interval. But I'm dividing that by 80-1, and I'm translating it into a 350 gram meter gold equivalent, even though it's all silver, and silver is even more special and more rare and all that. But the last 2 drill results, I'm talking about gold because they were gold intercepts, and they were both better than 350 gram meter holes. And so it's, we've set a very, very high bar in 21, 22, 23, 24, and 25, but our technical team and really the geology has allowed us to continue to put out world-class drill results. So, no, the results are good. They're not incorporated in the resource estimate. These are brand new step outs. These are new areas, like the Wolf results from September 2nd, not in the resource estimate. The 2 Homestake results, October 2nd and November 10th, not in the resource estimate. We are putting out a new 43101 MRE in Q1, so it will incorporate all of this and should lead to a fairly significant increase in our existing 43101.
Excellent. That's a very good segue to go where I was going to sort of ask you next, which is, you've sort of completed your groundwork for your exploration program. You completed 84 holes, 56,000 meters and change of drilling this year. Pretty impressive amount of drilling for one season. So I was going to sort of ask a little bit about kind of where was that sort of drilling? You've got you've got this Kitsall Valley, but it's got multiple targets now and some very juicy ones. So it's not like the old Dolly where you were kind of sort of like a pretty small sort of hectare sort of land package, and we kind of knew exactly where we were kind of drilling. Now you got a lot of scale to this thing. It's a full district. So how'd you kind of split up those meters?
Yeah. And the district got bigger in May when we went from 15,000 hectares to 100, right? Making 3 very big acquisitions. We're focused on 2 areas. What I would describe as the Silver Rich South and the Gold Rich North. And they're separated by about 5 kilometers. And it's about a 50-50 split between those 2 areas. And if we look at the broader exploration plan, if we think about it like this, if 40% of our resources are going into silver and 40% of our resources are going into the silver gold, that leaves us about 20% to go property wide, do some regional work that's discovery oriented. So it's a nice balance of silver, gold, discovery oriented drilling.
Excellent. And so, I guess the sort of Gold Rich North would be the Homestake sort of ridge kind of property, a Homestake gold sort of deposit, which came about with a while back with Fury sort of coming in. And that's obviously where this drill result today has sort of come from, which is very gold sort of, very strong in terms of gold. Maybe you could kind of just go over again kind of what the drill intercept kind of was here today.
Yeah.
It's obviously got some width to it, which is sort of very interesting when you would actually sort of consider, what the potential of that might be, what the ramifications might be for that.
Yeah. Well, if your viewers go to our website, what they'll see is they'll see an image of this, and what this represents is this is actually from Ascot's Premier. This is from the 310 level, and we've got an image. Figure one is an image of this, and what we've got next to it is Dolly Varden drill core. And why? So I was up at Premier, and I took this sample, and when we went back to camp, it was actually my vice president of exploration, Rob Van Egmont, who went back to camp, and we just pulled up this core that you'll see on our website. And he said, Shawn, he goes, look at these two things. They look the same. And I said, well, Rob, this runs 10 ounce per ton. It's over 300 grams of gold. That's a pretty big statement that you think they look the same. And sure enough, when we got the results back, there was a 433 gram gold sample within this core. And so, how we framed the press release today was we reported 26 grams of gold over 14 meters, which is roughly a 350 gram meter interval. Now, within that, there was 122 grams of gold over 2.85 meters. But what's interesting, and why I bring this up, and other than looking at pretty shiny rocks that are worth a lot, there's a relationship, like the Eskay Riff, which was a mineralizing event that went on for 8 million years. Like the mineralization, the fluids, the event that endowed the Golden Triangle went on for 8 million years. It was a long time. There's a relationship between Eskay, Brucejack, Premier, Red Mountain, Homestake. So these are all, they may not repeat identically, but they rhyme. And there's a lot of similarities. And I just want to, one last thing, there's a certain periodicity in the Golden Triangle at large. Like if you look at this 500 kilometer by 500 kilometer area, that just in the last 30 years alone, explorers have found 150 million ounces of gold and 1.2 billion ounces of silver, and it's home to 2 operating mines that Newmont runs. That periodicity, we've taken that model and we've tried to apply it to our 15-kilometer trend. Now, with all these recent acquisitions, we've got a lot more ground, but we're focused in this area where what we're seeing is every 1,400 meters, there seems to be a break on the structurally controlled trend. And that's where we're finding new deposits. And they're high grade and they daylight at surface. And, exploration's tough. You've got big properties, you've got this little tool that the drill, where you're drilling and you're coming up with something that's like the diameter of a toonie. And you can miss this stuff. It's like a needle in a haystack. So just think about this. The fact that we're hitting, almost ounce material over 15 meters with, what's the diameter of a toonie, tells you how much metal is in the ground here. And already our existing 43101 compliant resource estimate has outlined about $10 billion worth of metal in the ground, probably going to 15 billion in Q1. Historically, mining companies will trade, the Explorcos will trade at 10% in situ value, right? So what is Dolly Varden worth?
That's the $1 billion question, isn't it? Uh, so, anyways, I just wanted to kind of get back to kind of the breadcrumbs I was talking about the news release. You brought it up. You kind of mentioned Ascot. Obviously, Fiore management have just recently kind of announced that they're going to be doing a bit of a restructuring on Ascot and its premier gold mine. It ran into some tough times, and you and obviously your team, that you're part of the Fiore sort of group of companies. You guys obviously have developed a pretty significant reputation for really knowing, BC very well, and also being able to deal with mine turnaround stories where maybe they weren't successful before. I'm obviously speaking about West Red Lake, having to take that mine, which got into creditor protection, and your team's been able to sort of look at it from a different point of view, and is on the cusp of potentially getting back into full commercial production with that. Only a couple of years after sort of picking it up. Is Ascot sort of like an interesting thing that might provide some further optionality to Dolly? It's got obviously some infrastructure not too far away. It was producing some gold and precious metal from rock, which your news release indicated looks a little similar to some of the stuff you have on your property. Are those breadcrumbs I should be reading something into, or am I just reading something where there shouldn't be anything at all?
Well, look, I think so. 3 years ago, I moved Dolly into the Fiore offices. Now, time we were roughly like a $50 million company. We're 500 million today. So I think it's been a fruitful experience being here and being surrounded by 75 professionals that are helping, whether it's indigenous communities like Selkirk or Nishka through Nations Royalty or Selkirk Copper Mines, or if it's a Madsen restart, having that bench strength of technical expertise. I've learned a lot over the last 3 years being here and being around this incredible group, this environment that we've created. And so, yeah, we do have a track record of elegantly working with communities, working with the environment, getting the capital, buying assets appropriately. But, in the case of Ascot, when I started at Dolly Varden, Ascot's value was 15 times, 20 times that of Dolly Varden's. And a year ago, we went from being 20 times, 5 years ago, we went from being 20 times smaller than Ascot to being the same size of Ascot a year ago. And where Ascot's gone today, unfortunately for their shareholders, is it's gone and it's going to be trading at a valuation with the rights offering that's lower than where Dolly Varden was 5.5 years ago. And Dolly Varden is about 2 times the size of Ascot's peak valuation. So my point to you is, look, at some point in the future, do we want to get our ore into a mill? Yes. Does it make sense to look at direct shipping to a permitted 3,000 ton per day mill that's on care and maintenance? Yeah, it's probably something that our economic study should consider, as we also consider standalone facilities. At the end of the day, I'm working for my shareholders, and my shareholders have given me money to give them exposure to silver. Now, as a byproduct, silver, you find it with other metals. We're finding a lot of gold around our silver. If it makes sense for our shareholders to continue to pursue that conversation, we will. But I think having that disciplined approach of, it was very tempting a year ago, Keir, when both companies were valued at around $200 million, to consider a merger, considering that we came from 20 and they came from 500 million. It was the right choice to stay disciplined and stay on the course. And we're staying disciplined and staying on the course right now. And as we look to transform, because we've done 5 acquisitions in the past, we're actually looking and focusing on operating businesses today. So Ascot is not an operating business. They're a business that's going to go through development, road building, drilling. If you talk about the Madsen example at West Red Lake, it's been 2 years of de-risking, right? And about $200 million of capital to get it there. So these are capital intensive, but we are monitoring it.
Very eloquent answer. Thanks for going into that. And that also looks like an interesting sort of project for the group, and some interesting stuff in your own news release. So thanks for sort of going through that. why don't we jump back to kind of the MRE kind of discussion? When's the last time that Dolly Varden completed an MRE?
Uh, we,
Uh,
we put out an MRE in Q1 of 2023.
and approximately how many meters of drilling sort of been done since then?
Well, technically, that MRE did not include some of the drilling that was incorporated onto the project. So that was just merely um, taking the Homestake project and the Dolly project and talking about them and referring to them as one project, as they were two separate
Yeah.
MREs. So I guess the answer is you're looking at north of 150,000 meters of drilling that will be incorporated into this new MRE. Now, one thing to consider here is a lot of that was regional. A lot of that was not focused on specifically growth. And a lot of that was focused on moving inferred ounces into M&I ounces. There was only maybe like 25% of that was focused on growth. And that's where I think if we could see a 50% increase to the number of silver ounces in the existing resource, the guidance I'm giving our investors is, look, you should celebrate if we can get to 100 million ounces of pure silver in addition to the million ounces of gold. And if we can get to a place where we're talking about a 200 million ounce silver equivalent project at these super high grades, where, better than 300 gram per ton on the silver side, better than 7 gram on the gold side, those should be numbers that are celebrated.
And again, just for those of my viewers that aren't as on the story as some of your obsessed shareholders, when is that MRE expected to sort of come out?
The guidance I've been giving is April.
Okay, excellent. Well, we wish you lots of good luck with that. And now, what about continued sort of news flow? Are you going to have other sort of drill assays set to come out of you, or have you largely through these sort of 3 news releases kind of put out most of the material stuff?
No, we've got another 80 holes. We got a lot of drill results that'll we'll keep the market fed from here till probably Valentine's Day. So lots of news to get out.
Excellent. What's sort of keeping you kind of busy? You got a busy schedule kind of coming up, lots of conferences. How are you sort of spending your time? Also, I'd say over the last 5 years, you went from kind of being a pretty smart guy who knew how to raise capital, being one of our new sort of younger like leaders. Everybody's dropping your name. Hey, this guy's coming in on a placement. Oh, I got this guy looking at our deal. What's the transformation sort of like for you as an individual with that sort of type of now you got some shoes to sort of fill of your own, and people are talking about you. What's that like?
Look, I just keep my head down and keep moving forward. And I work with very smart people. I'm blessed. I'm blessed. I work with, having the pleasure to work alongside Frank Justra, Rob McLeod, Ryan Waymark, and the broader team here, on the Dolly side. We've got an extensive technical team, Rob Van Egmont, Andrew Hamilton, Amanda Bennett. So I'm surrounded by all these smart people. And then I have my own beliefs on what role gold and silver are going to play in the world going forward. So, I'm going to be heading over to London, and I'm spending a solid week in Switzerland. And so from about the 15th or 16th of November till about the 25th or 26th of November, I'll be on the road for 10 days talking to precious metals oriented investors, mainly in Switzerland and in London. And so I'll be busy sharing the vision and the results that Dolly has put out. And then I'm invested in dozens of companies. Most of my concentration is in the Fiore group, but there are some people that are doing some incredible things outside of the Fiore group that are inspiring me to want to invest in those opportunities as well. And I just love this stuff. I love watching companies go through the mining life cycle. And I think mining does so much good for communities. I was on the road recently, and I saw how the mining sector touched the lives of sick children, where surgeries are and medical attention and resources are happening because of mining. And so, look, the challenge that I'm trying to challenge myself with after doing this for 22 years is like, return on investment is one thing for shareholders, but is there a way to do this where the community, and this isn't lip service, right? Like this is, hand over heart. Like you look at one of the things I'm most proud about, and I'm going to give all the credit to Rob McLeod, because Rob McLeod, he was the visionary for what is now Canada's largest Indigenous-owned public company, Nations Royalty. And then I think, he really inspired Ryan Waymark, who was the brains behind Selkirk. And Ryan found the opportunity, but instead of doing what we did with West Red Lake, where we bought the mine at a bankruptcy and our shareholders ultimately were the beneficiaries, Ryan worked with the Selkirk First Nations, who bought it out of the CCAA and then executed a $40 million institutional raise to move the project forward. So I'm inspired by Rob, Ryan, Gord, Frank, and all the people here. And I've got some huge shoes to fill in keeping them supported, and so. And again, thank you for your kind words. But we're also in an environment where, for the first time in probably 15 years, people care about precious metals. So that makes it a little bit easier.
Yeah, that's a great answer and good segue. So if you look at how much capital on an equity basis that Dolly's raised over the last 5 years, the vast majority of it's come very recently, come this year. We finally had a little bit of a rambunctious sort of precious metal market. We've seen in certain areas in the world lineups at some of these places where people are lined up, the bullion exchanges lined up to buy their bullion and stuff like that. We kind of had everything was just looking completely vertical up until sort of last month. We've had a little bit of kind of a pullback on some stuff, but still very, very, very sort of healthy. So I think, if I'm not mistaken, you guys this year have completed around $63 or so million in equity financings. And I think some of those were no warrant. So maybe you could kind of just run through. You mentioned that you got about 64 million in the treasury now. What were sort of the terms of your last couple of financings?
Yeah, so you're absolutely right. It's a really good point, and one I hadn't thought about. Of the $185 million the company's raised in the last 5.5 years, a third of it's come this year. And really a third of it's come in the last 6 months. So on the last $34 million that we raised, the average dilution price was $7.50, which, or $7.40, which, if you look at the all-time high on the stock of $7.49, was a pretty good deal for existing shareholders. Now, what makes it a good deal for the new money is they paid $6.50. And how we were able to dilute at an average of $7.50 when the investor paid $6.50 is taking advantage of the tax advantageous charity flow through and traditional flow through options. So we were actually pricing some of our shares as high as $9.42 a share, and a lot of shares at $8.10 a share. So that helped our average from $6.50 go to $7.40. So the ACB on the last money raised, the last money in was $7.40 with a cost base to the investor at $6.50 a share. And today we've bounced back. We've had a great run. When we listed our shares on the New York Stock Exchange, we were $3.75 a share Canadian in April 21st. We got up to $7.49. So, we had a healthy pullback. We got down to about $5.20 last week. We've bounced back to $6 here on the back of silver prices going up almost $2 an ounce today. Gold prices up over $100 an ounce. And not to mention, the fifth best drill hole the project's ever seen. So the average co out there that didn't generate news today is up 2 or 3%. We're up about 8% on the back of some really positive results.
What do you think about kind of the health of the market? Obviously, I'm a pretty active sort of like investor. I always get a little uncomfortable when a lot of other people start talking to me about a sector I like. I like when things are a little bit quiet and there's less competition to get into financing some companies. But what are your thoughts? You're obviously probably liking it the other way. You like it when there's a choice of dollars that you take and a whole bunch of incoming interest to want to like give you capital at nearly all time highs, so that you're able to really build that war chest and give you more flexibility. What are your sort of thoughts, sort of in kind of the general kind of market? And one thing I'll mention that we haven't talked about, but I'm sure you're going to bring it up: silver was added as a critical mineral by the USGS. So that is something that a lot of people were speculating. You brought it up kind of a couple of times. Uh, Maybe how does that sort of handle sort of the narrative for silver? So, anyways, lots to unpack there. What are your thoughts?
Yeah, no. On the first side of the question about just the markets, um, look, if you look at where we were in April, and let's just take the venture exchange, we got sold down to a 570 low on the venture exchange. From that 570 low, we traveled up to about 1040. So it was almost a doubling of the exchange. And I felt it was unsustainable. Just the amount of financings, the size of the financings, we were cannibalizing the money that was coming into the sector, and that's not wise. That's not appropriate, and I think we should, as an industry, taken a more disciplined approach and a more thoughtful approach. But look, when you've been starved as a sector for a decade, it's hard to be critical of those who raised as much money as they possibly could. Um, and look, from a longer term basis, the market is very, very cheap. And like if gold was $1,000 today, the market is cheap. Gold is $4,000 a day today. So the market is ridiculously cheap. But like anything, we were in the sub basement, right? If you think of this as like a 100-story building, we were like on P10, right? And so, we got up to like, I don't know, the sixth or seventh floor. And for those investors who were riding the elevator from P10, some of them were profit taking. That's just the normal sort of, evolution of things. But I think we got a long way to go. I think one thing we don't talk about enough is, why is gold up? Why is silver up? Like, if you look at the last, I don't know, 50 years, there's only been, or 60 years, there's only been 3 times in that 50, 60-year period where we are faced with a confidence crisis, which has investors rushing into these metals. Why are they doing that? And then if you take a longer term historical view, whether that's 80 years, whether that's 500 years, what have previous historical examples taught us about what's to come? And so the simple answer is, we may be headed into a very uncertain time, and a time where this may merely mark the beginning of the ascent of the metals. And if you think about how these metals trade and how the proxies, like the mining equities, are relative to where we are in that larger cycle, I think we've got a long way to go. But if we just look at the next 6 months, Keir, I think, based on my 22 years of experience and spending all of my spare time on studying history and talking to people that are a lot more experienced, a lot smarter than I am, I think where we go is we go 50% higher than the September high, and we get there by the spring. So now that's not going to happen. That move will not be evenly distributed. It'll be a stock picker's market. There are things that got way ahead of themselves that aren't, but just generally, if you want to play it safe, this is a good time to between now and Christmas to be starting to enter positions. You could buy ETFs, GDX, GDXJ, SIL, SILJ. You can buy the ETFs, which will give you exposure to the best names in the space. And I think you'll be rewarded if you wait until May. For me, this is not a trade. I think silver is going a lot higher, and I want to be left with the silver when that crisis or confidence reaches its peak point of um, uncertainty, because I think that's ultimately going to be where the proxies, the fiat currencies, are going to be valued. And I'll give you an example, just a practical example. 5 years ago, when I took over Dolly Varden, you needed 64,000 ounces of silver to buy a home in Vancouver. 64,000 ounces to buy a home. Today, you need 15,000. Are we going to go to a place on a relative basis? I don't know where the nominal price of silver goes, but on a relative basis, I think I'm going to need less silver to get more of whatever it is that I want.
Well, that's a very compelling job for why we should be looking at these miners instead of holding cash in a bank account. But anyways, I'm sure we could extrapolate that into lots of other stuff. I know you're a busy guy. Just want to kind of touch on a couple of last sort of points. You mentioned your New York Stock Exchange listing. That listing now is getting a lot more liquidity, about fourfold the average daily liquidity than over your Canadian listing. What's the experience been like so far? And do you think, what does that say about the Canadian sort of markets?
I feel like if there's one area for improvement, I don't think I've really worked that listing as much as I could have. Like, I think that it's similar to when the new management team came into Dolly Varden. I mentioned that we started in 2020. The big results didn't start coming until 2021 or 2022. We're going through the growing pains and the learning, and so I think we're just getting started on the U.S. side. With over 90% of capital in North America being U.S. centric, using that as the benchmark, we should see 9 times the liquidity, not 4 times. And I think it's just due to our lack of experience. And we'll get better. We'll spend more time on the road in the U.S., although it's a little difficult right now with the government shutdown, trying to get into the U.S. We've got some team members that are trying to get there in 2 days, but hopefully that gets resolved and we can get on the road more there.
Excellent. And maybe just if you can speak a little bit about the, we're not going to mention any names that can't be mentioned, but the type of investors that sort of came into your placement. Have those investors kind of like changed, or were there some like new types, new names? What do you think about what do you think about some of your compatriots? Some of the other sort of peers and those that kind of play in the sector that raised a lot of capital. A lot of capital is kind of taken out in a pretty short period of time. Are you how are you sort of set up for allowing the ability for people to sort of like take profits as compared to some others? I'll just give you an example. There's a company I follow. It came to me in the summer and was really hoping to raise some capital, fairly small amount of capital. I said, sure, I'm interested. Then when they actually organized the round and they oversubscribed, they kept announcing they were going to oversubscribe it, and they kept increasing it to the point that it was about 25% dilution in one funding. And it's a 4-month hold placement. And I just wonder, well, when that comes free, that's a lot of new paper. And it was a pretty illiquid, very tightly held story before. And I just wonder, well, how's some of that money going to find an exit when it doesn't really trade a whole lot? So how do you sort of go about it from your seat from Dolly. Obviously, you've raised lots of capital before. How do you sort of manage it, and what do you think in terms of some of the groups that sort of got involved with you here, where you raised 1/3 of your money in the last 5 years you did in the last 6 months?
You know, what's really interesting that like the point you bring up here is, and one of the things that come to mind just listening to your experience and your example there is one of the tough parts about investing in this space is will you have the liquidity? What is the philosophy when it comes to providing that liquidity? And I don't think, particularly when you're talking about these earlier stage, you used the term VC earlier, these startups, like it's a huge question mark. And so our last financing was 4% dilution, and it was immediately free trading. So there is no risk there.
Yeah.
One of the things I really celebrate, and this is something I've experienced over the course of my business career, sometimes it takes a decade to nurture a relationship. And I started going over to London for Dolly a few years ago. And there was a group that came in for the first time in this offering that's a well known UK based institution. And it was really rewarding to see them on the exempt buyer list because I'd gone over there, 3 or 4 years in a row. They got to know me. They saw that I kept showing up. I did what I said I was going to do. And so it was nice. It was really nice to see some of the existing shareholders support us, but it was nice to see some new entries come in. And so, yeah, no, it was, and then also like, I gave a lot of kudos to the team here. I got to give kudos to Haywood and Aventus and Research Capital and Raymond James, because without them, we would have had no capital. And I'd say the biggest contributors, Eric Sprott, Hecla Mining, without those two foundational investors, Dolly would have never launched. And so, yeah, no. So we're very lucky. There were some people that stepped up that have been in our corner, win, lose, or draw. They've sucked their necks out and put their capital at risk, and we take that very seriously. And a lot of philosophies of some management teams, especially the early VCs, is as soon as the money is raised, they think that's like it's like the mission over, right? And it's like no, that's when the work begins,
Yeah.
right? So no, it's taking in $185 million comes with a heavy degree of responsibility. And, but we wouldn't have taken it unless we didn't believe in the geology and believe more about our team's ability, even beyond these rocks, to go and get exposure and to really build a company. And I think, look, so many previous mining companies have showed us the way to go. You start with a single asset, but as you grow, as you get bigger, you diversify the risk with the buy and build strategy that Frank Justra has executed very well in his career. And you just keep growing. You keep growing. And we're in a world right now, more importantly than any other time in history, where size matters. In the passive investing universe, if you can trade, if you can be on a big exchange, if you can have liquidity, it's the snowball effect. It's the momentum effect. And so, I think as Dolly, the hard parts, it takes a lot of jet fuel to launch. We've launched, and now it's important that we use this momentum, work harder than ever, and I think really good things will happen, and just keep attracting projects and people and money and keep going.
So I guess so. You mentioned you're financing obviously free trading right away. Is that something that you kind of prefer as an executive to provide like instant liquidity that you're trying to bring on long-term shareholders that are going to be shareholders with you for the next decade plus? But it's hard to. A lot of people will say, "Sure, Shawn, I'm a long-term shareholder," but maybe they aren't. Again, that comes down to your ability to nurture a relationship and find buy-in. But is that something that you, as an executive, do you have a preference on which sort of structure
So
Do you prefer? Yeah.
I,
Anyway, so
I
let's. Oh,
yeah, listen, I think some of the rules around how capital was brought in that, at a time that predates my participation in capital markets, my understanding is the first private placements that were done on the Vancouver Stock Exchange were 1 year holds.
yeah.
And I think the rationale behind the hold was allow that money to build the business, so that, you were not in this perpetual death spiral or debt spiral. And so I think to answer your question, it all depends. We're at a point right now where in terms of liquidity and size where I want to attract those institutions that may be restricted from holding some type of legend security. Just the actual structure and the prospectus, the way they're built. So, we want to deal with like institutions that are managing billions and billions and billions of dollars. And from a liquidity standpoint and a compliance standpoint, they may not be able to hold restricted stock. And so I just think it all depends. Ultimately, to answer your question, though, I want to find, and this is why, to me, what matters more than valuation, percentage of dilution, is the buyer and the buyer's time horizon and the buyer's integrity. I trust Eric Sprott. I trust Hecla Mining. I trust, Fidelity. And so for me, I would rather give better terms, have happy investors where they're going, okay, go build the business. We know it's going to take 10 years. Go build it. We're going to be here. We're not going anywhere. And it saves me from having to spend a lot of money on marketing and having to spend a lot of money replacing them. But at the same time, you also want distribution, right? And you want to have a big retail base and you want to have liquidity and you want people trading your name. You want people to be able to come in and come out. And I think that's where it just matters about building the long-term fundamentals of the business. And what I'm really proud about is 88% of our money goes into the ground. And look, not everybody gets it. Not everybody gets it. And, the best piece of advice was I got from who's now the CEO of Argenta Silver, who used to work for Dolly Varden, Joaquin Marias. He said, Shawn, you're not selling ice cream. You're not here to please everybody. Just, do what you know is the right thing to do, and the rest will take care of itself. And it was great advice, and we're going to make mistakes along the way.
Well, thanks very much, Shawn. Just to let you summarize, how would you like to sort of cap the conversation here? We've got a good conversation. Again, always enjoy interviewing you. Lots of great sort of sound clips and some great advice and some great things for us to think about who might be considering the company. But how would you like to cap it off?
I've told my team, like I feel like I'm fair and I feel like we're partners, and but I've told them, I said, look, guys and girls, I need everything from you here. Like from here to the end of the year, like, we're going to go really hard. We've got to get out, and this is the moment. Like, this is the moment I've been training for the last 22 years. And this is the moment where, we've got the goods, we've got the momentum. And so I'll just leave you with, we are going to work harder than we ever had between now and the end of the year. We've got specific objectives that we're looking to get out on the M&A front, on the drill result front. And, again, there's 3 pillars to this business. We've raised the money, so we don't need to do that. We got 64 million in the bank. We're good next year. We're good the year after. That's covered. So that we can focus on the other 2 pillars, which is on the science, on the discovery side. We got 80 holes to report. And then I'm going to challenge us. I'm going to challenge the team. Look, we've done 5 accretive M&A deals that have been, one of them was totally transformational. Let's do another. And this time, let's try to get exposure to cash flow.
Hey, excellent. Great way to wrap up. Shawn, have a excellent sort of wrap up to the year. Sounds like you got a lot of great travel. Hopefully anybody who has a chance to meet with you can score time, because you're definitely you've got a quality story, quality person, and a depth of knowledge that anybody would be lucky to spend a couple minutes with you. Have a great rest of the year, and I wish you lots of success going into 2026 and watching for sort of Q1, Q2 sort of MRE. So we'll catch up with you next year. Thanks, Shawn.
Keir, grateful for you having me on. Thank you.